Most traders miss the very moment when the market shifts direction. But what if you could spot that reversal in just 3 candles? In this video, I'll show you my 3-candle reversal pattern strategy, a simple yet powerful setup that works perfectly with 30-second candles and 1-minute expiry on pocket option. You'll learn how to identify the pattern, when to enter, and how to manage your trades safely. Disclaimer: this video is for educational and informational purposes only. Trading involves risk and may result in loss of capital. Always practice first on a demo account and trade only with money you can afford to lose. Let's understand how this setup works, step by step. This strategy is based on just 3 candles, revealing a complete story of momentum and reversal. First candle, a strong impulse candle showing who's in control, buyers or sellers. Second candle, a small indecision candle, also called a doji or spinning top, showing that momentum is slowing down. Third candle, a strong opposite candle confirming the reversal. That's where we take our entry, exactly at the close of the third candle. For buy setup, first candle, strong red closing near the low. Second, small doji. Third, strong green closing above candle 2's high. For sell setup, first, strong green near the high. Second, small indecision. Third, strong red closing below candle 2's low. Use 30-second candles with 1-minute expiry for aggressive trades or 2-minute expiry for safer confirmations. Avoid sideways markets, flat EMA, or major news events within 15 minutes. Remember, focus on quality, not quantity. Just 3 good trades per session can make a huge difference. And to make things easier, I've created a free strategy PDF checklist. You can download it from the Telegram link in the description and keep it open while you trade. Now that you know the rules, let's dive into the live chart and spot these setups in real time. Let's jump straight into the chart. Here, the 3-candle reversal pattern has just completed. We can see a strong red impulse candle, followed by a small indecision candle showing sellers losing strength. Then, a powerful bullish candle forms, closing above the previous candle's high and crossing the EMA 20 line. That's our confirmation point. Right here, I entered a buy trade, aiming for a 1-minute expiry. Notice how cleanly the third candle breaks structure. This is the moment when momentum shifts from sellers to buyers. As the next few seconds unfold, price continues to push upward. The bullish pressure is increasing and the candles are forming higher lows. The EMA 20 line is slowly turning upward, confirming that short-term sentiment has changed. During the middle of this trade, you'll often see small pullbacks, but as long as the candle bodies stay above EMA 20, the momentum remains healthy. This is where patience matters. Don't close early, just let the expiry finish. And there it is. The candle closes nicely above the entry level, giving us a clean in-the-money result. Now let's analyze a few more real chart examples to build your confidence with this setup. Here, the market has just printed a classic 3-candle reversal structure. We see a strong red impulse candle driving the price down, followed by a small-bodied candle showing hesitation. That's our signal of selling exhaustion. Then a strong green candle breaks above that hesitation and tests the EMA 20 zone from below. That's the confirmation I was waiting for, so I entered a buy trade for a 1-minute expiry. At this point, buyers are attempting to regain control, and the setup aligns well with the reversal logic. Right after entry, price pushes slightly upward, an encouraging start. The next few seconds show mixed momentum. Small bullish wicks appear, but the candles hesitate near the EMA line. When the market stalls like this, it means both sides are fighting for direction. Notice how the bullish candles fail to close decisively above the EMA. That's often an early warning sign of a weak breakout. Even though the pattern was technically correct, momentum didn't extend far enough. This is the stage where patience and observation teach you far more than any win. And here's the closing moment. The candle finishes below the entry point, giving a loss on this trade. It's a reminder that even perfect-looking setups can fail when volatility fades. The EMA stayed flat, and buyers couldn't maintain control. Instead of feeling disappointed, I treat these results as valuable feedback. The setup worked in structure but lacked momentum confirmation. Losses like this help refine judgment on timing and session selection. That's why risk management is key. Small controlled losses keep you in the game for the next high-probability opportunity. Now let's break down what could have been improved and how to identify stronger reversals next time. Here, the market sets up a textbook reversal opportunity. We start with a strong bearish candle showing seller dominance, followed by a small-bodied candle where momentum pauses. That's the market catching its breath. Then comes a confident bullish candle breaking above that hesitation zone and testing the EMA 20 from below. That's our green light. I placed a buy trade right at the close of this third candle for a 1-minute expiry. Everything aligns here. Momentum shift, structure break, and confirmation from price strength. As soon as the trade activates, price starts moving upward with clear intent. Each small pullback is quickly bought up and candle bodies are closing higher. Notice how the EMA 20 line begins to flatten and tilt upward, a subtle yet powerful sign of changing trend pressure. Even though short-term volatility is present, buyers are clearly in control. This is where discipline matters. We let the setup play out rather than reacting to every tick. Confidence comes from trusting the pattern, not guessing its outcome. And there's the close, a clean finish above the entry level, giving us a winning trade. So that wraps up our live examples of the 3-candle reversal pattern strategy. You saw how the same pattern can give both winning and losing trades, and that's the real beauty of trading with structure. Wins build confidence and losses build experience. Together, they teach you when to trust the setup and when to stay patient. This strategy is simple, but when used with discipline and good timing, it becomes a powerful tool for short-term trading. Keep practicing it on a demo account until you master the flow of momentum and reversal. If you found this video helpful, make sure to like the video, subscribe to the channel, and share it with your trading friends. Your support really helps the channel grow and motivates me to bring you more free strategies and live examples every week. And don't forget, I've added a free PDF checklist for this strategy in the Telegram link below. Download it, keep it open while trading, and you'll never miss a perfect setup again. As always, this content is for educational purposes only. Trade wisely, manage your risk, and focus on consistent learning. Thanks for watching Sam Trading Strategies. Trade smart, stay disciplined, and I'll see you in the next video.